Hey guys, it's heyteacherraf@gmail.com. Email me and I'll help you on your teaching journey, or click subscribe and see more tidbits like this. Today, I want to talk about what's going on in the financial system, the stock market, the bond market. What is going on with interest-bearing accounts like savings accounts at the banks? What is that all about? So the Federal Reserve has been pumping money into the stock market, over $6 trillion. That's a really big plus. So all of the 401k accounts and IRA accounts, Social Security accounts, retirement accounts are still active and they haven't lost very much money, which is important. But they can only do that for so long before the Fed decides to pull 13, 14,000 points out of the Dow Jones, dropping the Dow Jones below 10,000, below 9,000, below 7,000. Now, many economists think that this will happen eventually because the Federal Reserve can only pump so many trillions into that market. They've already announced that this quarter they're going to pump an additional 3 trillion into the stock market. They've already pumped 6 plus, now 3, it's going to be up to 10 probably in the next 45, 50 days. This is a staggering amount of money. What that means is that the Federal Reserve has two balance sheets. One balance sheet that we're able to see and another balance sheet that we're not able to see that includes other debt that they're buying up. So the Federal Reserve is not only the lender and the buyer, they're going to become the owner. And they've been shelling out money and purchasing everything up all over the world, all kinds of central banks everywhere. So this is sort of a transition into a new system if we don't get back up and restart the economy ASAP. Imagine a bathtub, right? Filled with water, and the water just keeps pumping, 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 and it's now going over the brim. That can't happen, right? So the Federal Reserve can only pump so much money into the stock market before they have to pull the plug and drain that tub. So if the Dow Jones is around 24,000, probably 14 to 15,000 points are not even the public's anymore. That means the Federal Reserve can retract that money at any time. So I, for one, am not a financial advisor. This is not financial advice. And if you want financial advice, get a professional who's licensed to tell you what's what. But remember, they're getting paid to answer your questions. I'm just giving you my lowdown. And it just looks to me that the stock market is super volatile. And if you're a short term trader, you're going to be making bank. Day traders, options traders, but if you're a long-term trader or a long-term investor, like the majority of people are who have a 401k retirement account, then that money is tied into the stock market. And what I did was I just basically got online and moved all my money from the stock market to bonds and stable bank funds. Now, you can move it out of bonds because this Fed is now saying that they're going to buy corporate bonds. Now, that's a huge new thing that's never been done in the history of finance. We're in new territory. And they're also saying, the Federal Reserve is also stating that they're going to buy ETFs, exchange traded funds that track them. That's a very big deal because they're starting to control more and more of the entire systematic way that the economic financial system runs. Not that they weren't in control of it originally, but the system still had some leeway. Now that leeway is slowly getting squeezed out. So they're also talking about negative interest rates on interest bearing accounts like savings accounts. Now, this should only scare the super rich because this is a strategy to try to provoke the super rich to move their money from savings accounts into the stock market to keep propping that stock market up because the Fed can only prop it up for so long before they have to pull everything out. And so these negative interest rates, if they do come on board, which it looks like they're going to in the near future, that will mean that if people have a savings account, you're not going to be getting that 1 to 2% bump any longer. It's going to go negative. You'll be paying to have a savings account. So you could also open up a checking account. It's 0% interest. I don't know if they're going to have a negative interest rate on a checking account. They might not. So there's always loopholes to get around this stuff. And the Federal Reserve is pumping the brakes on the decreasing of the stock market by continuing to inject new funds into it. So what does that really mean? Well, inflation usually is 3 to 4%, and right now inflation should be somewhere between 9 and 15%. Whoa, but it hasn't caught up yet because of the fact that the Fed has been pumping the brakes. But the Fed can't pump the brakes forever, and they won't. So once they decide to retract 14,000 or 15,000 points from the Dow Jones, it'll go down below 10,000, 9,000, below 7,000 points. And I, for one, I'm not going to sit around and wait for that to happen. And so I have moved all my long-term investments. Now, my short-term investments, you can play with a little bit of money here and there for short-term investing and making some money because the stock market is so volatile. But long term, I would definitely move it to something very conservative, very stable. Either the bond market, which who knows about that anymore because they're buying corporate bonds and ETFs, or maybe stable bank fund, or an interest bearing account with your bank, like a savings or checking account that's backed by the FDIC. So May 19th is the due date when the oil future contract uh, has its deadline, meaning that the oil, the barrels, millions of barrels of oil have to be delivered or put somewhere or stashed somewhere or stored somewhere by May 19th. I don't know what they're going to do about this. I don't know if they're going to craft a new decision, a new strategy to try to offshoot that oil somehow, so that futures contract doesn't go through the ground. Because May 19th, that could be another historic low for the stock market. I mean, that's how it logically should play out. Now, if they come up with some crafty ideas to offset that somehow, we'll see. We'll see. But a couple days before May 19th, I'd say what May 18th is Monday, May 19th is Tuesday, and then May 15th is Friday. So I'm not sure if it's going to start Friday or the 18th, but there should be some volatility. We'll see what happens if they find a way to offset that oil. Anyhow, this is just an update. I hope you're having a great day. Remember, email me at heyteacherraf@gmail.com or click subscribe and see more tidbits like this. Thank you. Have a great day. Take care.